PayPal finally has got a new CEO, and for any company, the appointment of a new CEO can often be a pivotal moment. And for publicly traded companies and the underlying stocks in particular, a new CEO can fundamentally change the trajectory of the stock for better or worse. Such is the case with PayPal, a global leader in digital payments, whose stock has experienced a brutal 78% decline from its peak in 2021, as PayPal now welcomes a fresh face at its helmet. Alex Chriss, who's a seasoned executive whose successes at Intuit have earned him a reputation as a visionary leader. However, as investors and industry experts eagerly anticipate the impact of this leadership transition, the burning question everyone has is to what extent the appointment of PayPal's new CEO can truly mark a turning point for PayPal's stock and change the investor sentiment towards PayPal. I think I have a couple of interesting thoughts on this topic, and so without further ado, let's jump right into my analysis. So on Monday, PayPal revealed its decision to appoint Alex Chriss as the upcoming CEO, taking over the position on September 27th. Dan Schulman, the current CEO, will retire as PayPal CEO next month and will then continue to be part of PayPal's board of directors until May 24th next year. And PayPal's board of directors absolutely took its time to find the right fit. Schulman already announced back in February that he intends to retire, and apparently PayPal chose Chriss from a pool of 9 different candidates. PayPal's board chairman wrote, with his depth of experience in product development, his passion for serving customers, and his long-standing commitment to empowering and enabling small businesses, and his proven track record of developing and inspiring his team, Alex is the perfect leader to take PayPal forward and accelerate the company's growth opportunities. Okay, and this brings us to the first chapter of this video. There will be 5 in total, and I will discuss what exactly investors should be focusing on. So in this first chapter, I want to take a look at Alex Chriss' profile and background and discuss whether he's the right candidate for PayPal. So Chriss has been working at Intuit for 19 years. And Intuit is a global company that provides financial management and compliance products such as QuickBooks and MailChimp to millions of users around the world. And at Intuit, he's been part of the executive leadership team and running Intuit's small business and self-employment segment. And his track record of running this particular unit is certainly somewhat impressive. Arguably, it was the best performing segment at Intuit over the last 5 years. During his 5 years leading the group, the number of customers grew at a compounded annual growth rate of 20%, revenue compounded at a rate of 23% annually, and he led the $12 billion MailChimp acquisition. For context, the segment run by Chriss represented around 1/3 of the total revenue of Intuit. Now, all of this is very positive, right? However, Chriss is relatively young, at just 46, and he wasn't the CEO of Intuit, so he has no prior CEO experience. And arguably, he is coming from a much smaller company. At Intuit, he was overseeing less than 1/4 of the revenue of PayPal, and PayPal's new CEO is stepping into a sea of challenges. On the other hand, he spent 19 years at Intuit in all sorts of roles like Chief Product Officer, and he's also worked at Microsoft in the past. And while he wasn't the CEO of Intuit, as we have pointed out, he was leading the most promising segment of that company, and he did very well in his role. I've also read comments that highlighted that they like to see someone coming from outside of the fintech space who can bring fresh ideas and perspectives to unlock new value and revive the PayPal brand. And the fact that he's never been a CEO at another company might also be a great motivator, as he still needs to prove himself. So I don't know, let me know what you think about whether he's a good fit or not based on his profile. PayPal has certainly taken its time to make that decision, and some key activist investors like Elliott were most certainly also involved in the decision-making process. So what should investors focus on to determine whether Chriss is actually a good fit? I think there are 3 main areas. First, investors would love PayPal's new CEO to address the issue of stock-based compensation. In my last video, I already highlighted the notoriously high level of stock-based compensation at PayPal and how it affects PayPal's ability to generate true free cash flow. Mario Cibelli, who's the founder of Marathon Partners Equity Management, he actually shared some very interesting insights on Twitter on the topic of stock-based compensation. Let me just show you what he wrote. He wrote, One area that will be critical for the next CEO of PayPal to address is excessive stock-based compensation and dilution. PayPal has one of the very highest ratios of stock-based compensation divided by GAAP operating income in the United States, and will need to make a break from the past in order to address it. And he shared the following table along with his post. He then wrote, PayPal's delta between GAAP and non-GAAP earnings per share is among the very widest of any US company with substantial earnings. PayPal stands out even more, second highest ratio in the US, when big tech is removed from the results. I do not believe there are any valid reasons for allowing this ratio to remain so elevated. As a maturing company, PayPal can no longer afford to be such an outlier on stock-based compensation, while simultaneously serving the best interests of its shareholders. Yeah, and I have nothing to add to that. I think he put it very well. PayPal's growth has been slowing down significantly over the more recent years, so PayPal is no longer a high-growth company, and so stock-based compensation needs to be adjusted to that new business performance. Okay, let me use that opportunity real quick to talk about my investing mentorship program. I've recently started working with a group of 5 people, and I'm now looking to start with a second cohort. So if you want to be part of a small group of like-minded and aspiring investors who want to finally truly follow a proven and systematic investment process, including management analysis, business mode analysis, valuation, mastering your psychology, and much more. I think you should reach out to me either via mail or you can DM me on Twitter or Instagram. Spots are limited, however, so feel free to get in touch to learn more about the structure and the content of the program, and I'm obviously happy to provide more information. You can also find more information in the description box below, including my mail address. With that being said, let's move on. Next up, let's talk about capital allocation, another area investors should always focus on. One of the reasons why PayPal stock has been performing so poorly is because of the below average capital allocation decisions made by PayPal's leadership, and particularly the possibly value destructive acquisitions that have been made in the more recent years, for which PayPal used significant free cash flow that was produced by the business. And this is not even including the Pinterest acquisition rumors. I think you could certainly make the case that PayPal's past leadership team hasn't been particularly price sensitive and had a hard time integrating and then monetizing the expensively acquired assets. Also, just like many other tech companies, PayPal has overhired during the pandemic and needs to get its bloated fixed cost structure under control. That assumed a lot of growth that never really materialized for PayPal. So of course, as an investor, you would hope that Chris can do better in terms of the allocation of investors' capital. As of now, I think it's very hard to assess how disciplined he will be in terms of acquisitions and how high his hurdle rate will be. However, it needs to be pointed out that Chris led the $12 billion acquisition of MailChimp in 2021, and I've read a couple of opinions that Intuit clearly overpaid for that acquisition. And it was also pointed out that Intuit had to write down $3 billion of that acquisition, which is basically how accountants reflect that an asset is worth less than originally thought. So maybe this has been a valuable experience for Chris, but maybe not. It's hard to say right now, I think. We also don't know to what extent Chris was involved in negotiating the actual acquisition price. You could argue that's maybe part of the job of the CEO and CFO. And honestly, I think if Chris just realizes that PayPal doesn't really need any further acquisitions to add assets to its asset portfolio, this would already please a lot of investors. I think management would be much better off focusing on improving the margins of their existing businesses, especially the high growth unbranded transaction processing businesses, including the Braintree unit. So that's kind of the last point that I wanted to address. Execution is key for PayPal in its current position. A significant challenge that Chris faces is generating revenue and profit from the various shopping, payment, and financial service functionalities that PayPal provides, and linking them all together for their user base, possibly in a super app. The payment space is evolving quickly. There are many rivals and PayPal needs to stand its ground in branded checkout, but also needs to execute to bring unbranded to profitability. There are 400 million accounts and nearly 100 million monthly active users. We have a lot of trust in the PayPal brand, which leads to actually higher conversion rates compared to other payment options. And that's of course a very valuable asset that now needs to be protected. So what's my conclusion? I think investors can feel cautiously optimistic. Finally, there's some clarity regarding PayPal's leadership team, something that the stock arguably desperately needed. And investor sentiment might change now very quickly if Chris can get just a few things right. Again, let me know what you think about the new CEO in the comments down below. And you might want to watch my other PayPal video that I released around 2 weeks ago. Take care.